And my next speaker maybe will be playing to that space. My friend Solomon Asamaoh. So I have a question for you here, Solomon, but I think I'm going to change that question because because you've just been appointed CEO of Ghana Infrastructure Investment Fund. And that's what I'd like you, if you agree, to focus a bit more on. And I know that before taking on this role, CEO of Ghana Infrastructure Investment Fund, you did many things, including Vice President for Infrastructure at the African Development Bank. And so you have an Africa-wide knowledge of the issues and challenges. And, you know, you can certainly talk about what Ghana Infrastructure Investment Fund would do, but also what you see as some of the critical challenges really to build up the pipeline of investable asset products that these pension funds actually would be investing in.
Thank you, Alan, and thank you for changing the rules on me at the last minute without telling me. No problem. We go back. We used to work at IFC together a long time ago. So as mentioned, I'm the CEO of the Ghana Infrastructure Investment Fund. Today is my anniversary. I've been there 1 week, so I'm still new. And just to say a little bit about it, it was an initiative that the Ghana government has taken. They put $250 million of seed capital down. And the aim of the fund is to really facilitate infrastructure investments in Ghana. The new administration in Ghana, as was mentioned by Honorable Minister in his opening speech, is very keen to attract private sector investments. And it really wants GIF to be the vehicle to try and facilitate and help that in the infrastructure sector. And GIF will hold a pretty unique and a very important position within Ghana, in that because we are very close, obviously, to the government, we can work very closely with the government and with the various ministries in the infrastructure space. But also we have a private sector focus and a private sector way of doing things that will relate very closely to private sector investors. And so we see ourselves as going to be a very important bridge to facilitate better structured infrastructure investments in Ghana that talk to both the private sector and also the needs of the government of Ghana. Our new president has a very ambitious agenda, as anybody following would be able to tell you. He's a man in a hurry. We are a country in a hurry. And one of the impediments that we face, just like many countries in Africa, is a lack of infrastructure deficits, which we're trying to address. I think the issues, and I've been working on infrastructure investments in Africa for over 20 years, the issues are relatively well discussed and well known. The solutions obviously are a little bit harder, but there's a few things that we have to really focus on and make sure that we try to move forward on those particular areas. Firstly, we've got to make sure that our governments do the right thing. Not only say the right things, but actually do the right things. The good thing about talking to the private sector is that they will tell you what they need to invest. They will tell you what their criteria are. And then governments have a decision to make whether they try and meet those criteria or whether they don't. But you can't trick the private sector into putting money into projects. They will have their criteria, so we have to try as much as possible to meet that. I always say when I'm speaking to ministers, listen to the private sector. Don't give them what they want, give them what they need. If you give them what they want, they will want you to take all of the risks and they can take all of the upside. And to them, that's a fair deal. But that's not the way we're going to do things. There's a meeting of minds between the two. I think the other thing as well that is important to stress is that when we're trying to attract other sources of financing into infrastructure, we're talking about the private sector. We're talking about pension funds and sovereign funds and other sources, insurance companies. Most of those investors on the pension funds and have a very limited and very regulated appetite for risk. Really, they're really suited for the long-term cash flow aspects of an infrastructure investment. It's really the de-risking of opportunities, the construction risk, getting risk-taking institutions like Africa 50 to play a big role in developing and and constructing those investment opportunities. And then we can refinance and lay them out for 15, 20 years to the pension funds and tap into that pool of capital. And then the people who do the projects first can then recycle their funds and go on to de-risking the next lot of investments. So my passion and my heart is really in that early stage space where it takes people who have experience, understanding, can help to structure those investments. The challenge that we have in Africa is that that aspect is particularly difficult, it's particularly risky, and it's particularly difficult to achieve. So we need special attention and resources on the upfront project development aspects of infrastructure investments. And I always make this appeal to donors and people with large amounts of money and subsidized money. Can you still hear me? Yes? Okay. That they focus on this attention and make more money available for the early stage. Is this better? No. For the early stage investment base. That's a very important thing to do. The final thing that I want to say.
It's not working.
Okay, no problem. Final thing I want to say from a successful execution of infrastructure investments is that now, although private sector investment in infrastructure is still relatively new, there's enough of a track record now in Africa that we know what works and we know what doesn't work. So it's very important that we learn from those lessons that have worked. For example, Asamaoh just mentioned that there's a large number of PPPs that have taken place in East Africa. We're still struggling more in West Africa to successfully execute PPPs. And if I look at one particular area, the power sector of Kenya, which has attracted many independent power players there, because they have pretty much a really reasonably well-regulated power sector, and they have a bankable off-taker. And private sector investors will not invest in an infrastructure project unless they can see a bankable off-taker at some point, as well as commercial tariffs. So see, these are some of the lessons that we have to build into the structuring of our investments going forward. If we do that, there is no shortage of capital. There is no shortage of capital. If you speak to any institution that has a mandate to invest in Africa, they all want to deploy more. They all have more capacity to deploy more. It's just getting the structuring right. And I'll stop there, Alan.
Thank you, Solomon. We really welcome you as the CEO of the Ghana Infrastructure Investment Fund. And it's particularly because, as you said, this critical early stage development phase requires a number of things, including players with a commercial mindset, but who are close to government. Because frankly, the biggest risk in managing the development process is government-related risk. We need the project development industry to be strong, to be seen by government as people investing capital at risk, but also expecting to make the returns so that they could be taken seriously. And this is what is happening in other regions. If the project is not bankable because, for example, there are issues of environmental and social issues that through the studies are highlighted, then the private sector would take that risk and say, okay, fine, I will lose my money because the project is not bankable, because the technical capabilities that were expected before are not met. But when the government changes rules of the game in the middle of the development process, it's very hard for the private sector to understand why they should be losing that kind of money. And institutions such as Africa 50 and the Ghana Infrastructure Investment Funds hopefully can de-risk that process by co-investing with developers at the early stages to make sure that the project could move faster to the financing phase.
Doing business in Africa, you can't afford to be without Africa Investor.